All right, welcome into a Market Day Report. I'm Scott Shelley, otherwise known as the Cow Guy. Thank you very much for joining us, tuning us in. Let's take a look at the markets. That's what you're here for. You don't really care what I have to say. Let's bring up corn behind my big fat head and see what we've got going on there. We've got a better board across the board, between 5.5 and 8.5 cents higher. Let's start with July. That's 8.5 cents higher to 597.5. Trying to put a 6 in front of that one. 5.99 was the high. Deese is up 6 3/4 cents to 5.35 1/4, and that is just a half cent off the high there. So a decent corn board today, as we see a lot of green on the screen. How about soybeans? Well, they're higher today, and they're double digits higher. July's up 19 1/4 cents to 14.37, a penny and 3/4 off the highs there. Let's go out to the Novi new crop. That's up a dime to 12.78 1/2. All right, let's talk about wheat. This is where it all starts to get interesting. Wheat in Chicago. 14 1/4 cents higher in that July contract to 6.59 1/4. If you go out to Deese, that's up 13 3/4 cents to 6.87 1/2. All right, a couple cents off the highs there. Let's go over to Kansas City, see what the hard red wheat's doing. Look at that, 34 1/4 cents higher in July, 8.32 1/2 is last there. Still about 5 cents off the highs. We were pushing 40 cents higher in the day. Deese is now up 27 1/2 cents to 8.19 1/4, and that's about 3.5 cents off the highs as well. From Kansas City, we go to Minneapolis, 25 1/4 cents higher in that July contract, 8.37 1/4 is last. And a 23-cent rally in Deese and spring wheat, Minneapolis, 8.45 1/4 is last. And that's just about, what, 3/4, half cent off the highs. All right, we'll take it. Cotton was limit up yesterday, and today it's almost 252 points higher in July, 84.28 last. And if you go out to Deese, Deese is up 200 points to 83.40. That'll give you a nice little picture about what's happening there. The good news is we're well above 80 across the board. Let's bring in our next guest analyst, Mr. Todd Horowitz from Bubba Trading. Todd, thanks for being on the phone. You're in Vegas, I think, right? That looks like your art collection, your massive art collection. I think I see the museum docent behind you. What are your thoughts here when it comes? I mean, have we kind of exhausted the sellers and we're starting to cannibalize ourselves on the way out as they cover?
I think so. I think when you and I talked on Monday, they were ugly and we were depressed. And I said to you, and we agreed that maybe that was the final bit of selling we're going to see for a while. And we've kind of crawled up and had some nice up days since then. And not only in the grains, but at cotton starting, it looks like it's pushing through. Sugar, all the rest of the commodities are higher. Even oil, after making a panic low, I think it was either Tuesday or Wednesday night at about $61, is now $10 from its low made then. So I think we're starting to see that sudden turn in the commodity markets, and I think they look like they might be ready to make a pretty big move here.
Yeah, I mean, my next question to you is, has this been the second swing and a miss that the government's had at refilling the Strategic Petroleum Reserve?
Well, it's the second of many, I'm sure. You know, they should have never drained it in the first place, but that's a story for another day and probably a whole show. After you're on one of your other shows, but. Look, they should have filled it up, but they should have never drained it. You know, that is obviously wartime oil, not oil to try to bring prices down to make it look better.
Well, 266 million barrels, I think we'd see that if it hit the market. Am I wrong or right?
You're 100% right.
Yeah.
You're always right. I mean, you understand it completely. This is what we look at. I mean, listen, 40 years, 80 years between the two of us on the trading floor. We understand the things that you look at, and we're just not seeing, we're not seeing the right people do the right thing to take care of business when they should not be doing certain things. But the commodity markets, in the meantime, look pretty solid right now.
Yeah, they do, and you're right. And that's one of those psychological things where I think we just exhausted the selling. We had obviously a little bit of a Russia-Ukraine issue. Then we also had some production issues, and this is what you get when you don't have any selling. You get those types of things happen, and everybody's got to run for the door, and the door is only so big, right? So. Yeah, everybody can't get out at the same time.
Most start with the short covering rally, and I think that's where we started. Let's see if it can continue.
All right, stay right there. We got to go away. We're going to pay some bills. We're going to come back and talk more. Todd Horowitz from Bubba Trading in Las Vegas after this. All right, let's get to the livestock, our four-legged friends. Let's take a look and see what we've got going on in that live cattle Chicago market. It's a split here, split decision, but not by much, right? We've got June up 77 cents to 162.35. That's in the middle of the range, basically. 30 cents higher in the August to 159.77. But we do see the deferreds kind of lose a little real estate, a few ticks, right? If you go all the way out to February, it's down a dime to 172.45. That'll give you an idea. Feeder cattle. Well, we're backing up here as well. About $1.25, 35 across the board. August is off $1.22 to $221.92, and if you go all the way out to the nose, that's off $1.07 to $228.15. And then finally, let's take a look at lean hogs. We'll get back to our guest analyst. Lean hogs can't find a buyer. Boy, and we're really starting to suffer, losing some decent real estate out the deferreds. But we'll start with June up front. $1.57 lower to $85.52. But as you go out to, say, even October, you lose at $2.15 to $78.62. All right, let's bring back in Todd Horowitz. He's with Bubba Trading in Las Vegas. Todd, thanks for waiting around for us. Can't find a buyer in lean hogs. What's going on?
They're still buying beef, and I think that you're gonna find a buyer. I think lean hogs will go the way of a lot of the other commodities we've seen recently, where they'll find a bottom, you'll get a short squeeze, and then they're going to start to take off. We still have a big shortage. Not only are prices high in cattle, but we have a shortage, which should lead to some hog buying as well. I think we're going to see it all work out. I mean, cattle looks great, and I don't think it's going dramatically higher, but I certainly don't think it's going lower. And I think hogs are going to find a bottom here at some point. And I think that'll be the time that we'll see them take off and make their big move for the next couple of months. Of course, we know typically going to October, December, they do go lower anyway. So that's what we would expect here.
Yeah, his memory serves me correctly. We saw this happen in cotton last year. We saw it happen in nat gas as well. This year, it's been all about wheat and lean hogs having that big, strong short in there that's really not giving up the ghost. Now, we had that Russia-Ukraine issue. We also had some production issues. That's got us able to shake off the short in wheat. But I'm just wondering what it's going to take to see what happens if we can finally get this lean hog market to rally. So interesting. Always a psychological issue as well as some fundamental and technical stuff, too. But it makes the job fun, doesn't it, Todd? So appreciate you.
Does.
Appreciate you coming on. Have a great weekend. Todd Horowitz, he's with Bubba Trading. He's also in Las Vegas. I'm here sitting next to Suzanne in Nash Vegas.